Now let's get to today's feature segment on sector standouts with Todd Rosenbluth, Director of ETF and Mutual Fund Research at CFRA, the expert in ETFs, to tell us how to look at this market, which is at a record. Are you surprised to see the market at a record again?
I think that we're heading into a very seasonally strong period of time, so that November starting 6-month period is very strong. We find it historically being very well and outperforming the broader market. The 6-month period is stronger, the cyclical 6 months versus the rest of the time. And if you rotate it into the more cyclically oriented sectors of the market, like industrials or materials, it's even stronger than that.
Right. And you're making the point, some people used to say sell in May and go away. And you're saying that the November to April time is better than May through October. What about May through October versus the time that we're in now?
Right, so May through October is actually the worst of those 6-month periods, but it isn't just November through April or May through October, it's every 6-month period going throughout the calendar year. And we at CFRA don't believe investors should be selling, they should have rotated. And if they rotate now back into the more cyclical sectors of the broader market, like industrials, like materials, they would have outperformed the broader market, not only outperforming during that May-October period, but actually outperforming. And if you use the sector spiders, XLI is the industrial select sector spider, that's the market cap weighted product,
right.
Or the materials select sector spider, which is XLB, that's a great way of being able to get the benefits of diversification. Instead of individual stock selection, you get the market cap weighted approach to it, but it also is quite different if you went a different route.
And those are winners. I mean, we've seen XLI about 22% higher this year, XLB up about 15% this year. So when we talk about industrials and materials, they've been good sectors. So now if someone's listening right now, you're saying that they should go into these sectors now?
Yes. Historically, these sectors have done very well. We at CFRA are bullish on a number of the stocks inside, so we believe investors should look forward, not backward.
Right.
And with XLI and XLB, the market cap weighted ones of doing it. You could also take a more equally weighted approach to this using the Invesco S&P 500 equal weight products. So those products are available, the same underlying securities, but for example, RTM, which is the equally weighted version of the materials sector, instead of having a large concentration in the chemicals companies, you'd have a bit more diversification. You'd have some more packaging products companies spread out instead of being dominated within a couple of these chemicals companies that continue to make acquisitions.
So a little less risky is probably the way to say it. So when you're doing this rotation of seasonality, right? You're basically using seasonality for investing ideas. Is there something that you definitely stay away from now? Or you just pick on what you're moving towards?
So the cyclical sectors tend to do much better than the defensive sectors. So the cyclical sectors, we touched on industrials and materials. Technology would be an example within that.
That's a good one.
That's a good one in this seasonal period. And you could, again, take a more market cap weighted approach and have Microsoft and Apple be heavily weighted within, or more of an equally weighted approach to it. The defensive sectors would be something like consumer staples or utilities. Those are more risk-off areas of the market.
So those are better for the summertime.
Those are better during that summer period of time. So instead of, again, going to cash, which is the sell in May approach to it, we at CFRA think you should just rotate to some of those more defensive-oriented sectors and then rotate to the more cyclical sectors in the risk-on stronger period. November, December tend to be pretty strong. People want to try to outperform before the end of the year, show that on their statements. That'll drive some more bullish sentiment. But again, the past is just the past.
Was there a third one? You said consumer staples, utilities. I'm talking about the summer.
Yeah, so those are
a third one?
Those are the two that are primarily, that's there. Healthcare is another one that's a more defensive-oriented sector. It has some cyclical exposure to it. Biotechnology is not a defensive part of the marketplace, and that's grown in prominence. So you could stay with healthcare throughout both parts of it.
What about your thoughts on fund flows? I mean, they've been relatively strong, but volume has been a little bit later.
So what's interesting this year is that we actually are at a faster pace of net inflows this year versus last year. But what's been dominating have been fixed income products. So more than half of the net new money has gone to ETFs tracking like the Bloomberg Barclays Aggregate Index, like AGG, or a high yield approach to it like JNK. as opposed to the equity side. And so we haven't seen this in 10 years. So this is a real surprise. We'll see if it holds up. But if investors are taking a risk-on approach, then equities will return to favor. But if they stay more concerned about the broader marketplace, then a more defensive, income-oriented fixed income product should continue to gain ground.
So you're using this seasonality. Are you generally more upbeat, or are you worried a recession is looming?
So we at CFRA don't think a recession is happening. We still think that the economic data is going to be strong enough. While the earnings are going to be relatively weak and down this year, we think we're going to see a recovery in the fourth quarter, and then 2020 is going to be a much stronger year. And those industrials and materials sectors are likely to do better in 2020 from an earnings standpoint than they did thus far in 2019.
All right, good. Well, I like that. I like a stronger year for 2020. I hope that's exactly right. Todd Rosenbluth, it's great to see you. Thank you so much.
Thanks a lot.
Director of ETF and Mutual Fund Research at CFRA. Thanks for joining us on the show.